Hey, Mavis Davis. It's Avis Budget Group. Avis Budget Group, right here for car and truck rental and car sharing with a significant presence in around 180 countries worldwide through brands like Avis, Budget, and Zipcar. It holds on to a leading share of airport car rental revenues in North America, Europe, and Australasia, along with a car-sharing network and commercial truck rental business in the U.S. The company's extended global reach has swelled to approximately 10,250 rental locations made possible by the inclusion of locations operated by licensees, resulting in a global rental fleet that consists of approximately 695,000 vehicles, having completed over 38 million vehicle rental transactions worldwide in 2024 alone, generating total revenues of approximately $11.8 billion. Operations are categorized into two reportable business segments, Americas and International. In 2025, Avis Budget Group's strategy will focus on transforming key parts of its business through technology, system enhancements, and data. With a focus on customer experience, revenue generation, and costs, Avis's brands are able to serve different target customers, and the company recognizes benefits from its brands sharing facilities, systems, and administrative infrastructure. The Avis brand provides high-quality vehicle rental and other mobility solutions, serving the premium commercial and leisure segments of the travel industry. Customers can access services like Avis Preferred Rewards Program, luxury vehicle rentals, and access to satellite radio and GPS navigation, along with a mobile application that allows customers to control many elements of their rental experience via their mobile devices. Avis also offers a selection of luxury vehicles through its Avis Signature Series, as well as premium, sport, performance, and electrified vehicles. Additionally, the company provides Avis Budget Group Business Intelligence, a proprietary reporting solution for corporate customers that enables them to easily view and analyze their rental activity. While Avis Preferred offers counter bypass and additional benefits at different customer status levels, value-conscious customers are specifically catered to by Avis's Budget brand, which also operates or licenses budget car rental locations at airports and in cities worldwide, offering products and services such as refueling options, roadside assistance, and electronic toll collection. The Fast Break service expedites rental service for frequent travelers, and the mobile application allows customers to reserve, modify, and cancel reservations on their mobile devices. The budget truck rental business is one of the largest local and one-way truck and cargo van rental businesses in the United States, with a fleet of approximately 22,000 vehicles and a network of company-operated and dealer-operated locations. When it comes to car-sharing networks that provide self-service vehicles in urban areas and college campuses, Zipcar is Avis's brand for that. While Payless is a leading rental car supplier serving the deep value segment of the industry, having a presence in approximately 285 locations worldwide, with a business model that allows the company to extend the life cycle of a portion of its rental fleet by cascading certain vehicles to Payless. Avis supports its brands through a range of marketing channels and campaigns, including traditional media, digital media, and sponsorships of major sports entities and charitable organizations. A customer relationship management system is employed to deliver targeted and relevant offers to customers across online and offline channels. Loyalty programs, including Avis Budget Group Business Intelligence and Unlimited Rewards, provide customers with insight into their rental activity and offer incentives for frequent renters. Zipcar's marketing and sales strategies include digital marketing, email and in-app messaging, and social media engagement with a focus on acquiring and engaging members. There are also direct bill accounts and employee benefit programs to companies and governments through its Zipcar for Business program. Avis Budget Group's fleet consists of a wide variety of vehicles, including luxury vehicles, electrified vehicles, specialty use vehicles, and light commercial vehicles. The company maintains a diverse rental fleet, with no vehicle brand representing more than 19% of its 2024 fleet purchases. Fleet costs represented approximately 21% of the company's aggregate expenses in 2024. The company disposes of its risk vehicles through alternative disposition channels, including direct-to-consumer, online auctions, and direct-to-dealer sales. Program vehicles are disposed of in accordance with repurchase or guaranteed depreciation programs with major vehicle manufacturers. A strong emphasis is placed on vehicle maintenance for customer safety and satisfaction, with specialized training programs for technicians and policies and procedures to address manufacturer recalls. Avis Budget Group maintains strategic partnerships with airlines, associations, and hotel companies, and has developed relationships that provide brand exposure and access to new customers. To maintain vehicle rental and car-sharing services at airports, there are concession agreements with airport authorities, pursuant to which Avis typically makes airport concession payments and/or lease payments. Concession fees for on-airport locations are based on a percentage of total commissionable revenues, often subject to minimum annual guaranteed amounts. Car rental volumes tend to be associated with the travel industry, particularly airline passenger volumes, which reflect general economic conditions. The company's operations are seasonal, with the third quarter historically being the strongest due to increased leisure travel, meaning fleet utilization is typically highest in the summer months, with average quarterly fleet utilization ranging from approximately 66% to 72% in 2024. Competition is based primarily on price, customer service quality, vehicle availability, and brand reputation. The use of technology has increased pricing transparency, enabling cost-conscious customers to compare rates easily, further intensifying price competition. Competitors in the space are mainly Enterprise Holdings, Hertz Global Holdings, and Europecar Mobility Group, as well as smaller local and regional companies. The Zipcar brand also competes with local and regional mobility companies, ride-hailing and car-sharing services, and technology players in the mobility industry. Since this is the vehicle rental business, there's exposure to claims like bodily injury, death, and property damage. Avis generally retains economic exposure for liability to third parties, arising from vehicle rental and car-sharing services in accordance with minimum financial responsibility requirements, and purchases insurance coverage for exposures beyond retained amounts. The company offers optional insurance products and coverages to customers, which creates additional risk exposure. When customers purchase supplemental liability insurance or other optional insurance products, Avis Budget Group typically retains economic exposure to loss, as the insurance is provided by an unaffiliated insurer that reinsures its exposure through the company's captive insurance subsidiary. Avis also reinsures certain risks through its captive insurance subsidiaries, limiting its liabilities. Looking ahead, Avis is set to focus on executing its flexible fleet strategy and expecting lower per-unit fleet costs. Fleet costs are expected to drop with model year 2025 vehicles and strong used vehicle residual values. This builds on better utilization and external market shifts, focusing on cost optimization and flexible fleet management. Following an aggressive vehicle refresh to lower fleet age and costs and boost utilization and customer satisfaction. While tech investments like digital fleet tools are streamlining operations, fleet management will remain a key priority to adapt to evolving travel demand and tariff impacts. The company wants to keep a flexible fleet, enabling adjustments to supply with shifting demand. They expect better per-unit fleet costs with newer vehicles and favorable used car values. Leisure bookings are up compared to last year, offsetting commercial weakness. Management's watching automotive tariffs' impact on new vehicle costs and used vehicle values, needing flexibility to navigate uncertainties. In upcoming quarters, watch fleet rotation effectiveness, leisure travel trends, tariff impacts, and management's fleet flexibility. For more on Avis Budget Group and other companies, follow Ascencore. Thanks for watching and have a nice day.